Good morning, everyone, and welcome back to the channel. It's Friday, August 7th. And before the opening bell rings, let's break down everything you need to know: global cues, the big news driving sentiment, and today's Nifty trade setup. World market overnight wrap. So let's start overseas because global cues are pointing to a cautious start today. In the US, Wall Street closed lower for the second straight session. The Dow Jones fell 0.85%, S&P 500 lost 0.18%, and Nasdaq slipped almost 0.06%. Why? Two things: US Treasury yields combined on resilient labor market data, and more importantly, hopes of a clean resolution in the Middle East took a hit. That combination pushed traders to book profits after the Dow's record-breaking run earlier this week, when it crossed 54,000 for the very first time. Coming to Europe, by contrast, stayed resilient. FTSE, DAX, and CAC all posted modest gains, showing the region wasn't as rattled by the overnight developments as the US was. In the Asia this morning, the mood is clearly risk-off. Japan's Nikkei was down over 1%. South Korea's Kospi is down by nearly 1.7%. And Australia's ASX is also in the red. This is a direct read through from Wall Street's weakness and the big story of the morning: oil. Speaking of which, crude oil is the headline mover today. Brent crude has jumped past $83 per barrel, up over 1%, because Iran's parliament is reviewing a draft bill to formally bar US and Israeli vessels from the Strait of Hormuz. That's the opposite of the clean reopening markets were hoping for. And it's reintroducing a geopolitical risk premium into oil prices. For India, a major crude importer, this is a negative signal, especially for oil marketing companies and aviation stocks. Coming to gold, meanwhile, is also higher, up around 0.4%, as investors rotate into safe havens given the Hormuz uncertainty. Silver is up even more, or 1.3%. On the bond and currency side, the US 10-year Treasury yield remains elevated near 4.67%, reflecting sticky inflation expectations tied to firmer oil. Back home, the rupee is hovering around 95.2 to the dollar. It's stayed largely range bound this week as RBI's steady policy stance offsets pressure from the firm dollar. No major surprises on GBP or EUR crosses this morning. On Indian ADRs, with the Nasdaq essentially flat and Asian tech names under pressure, expect a soft, non-directional cue for IT-linked ADRs like Infosys, Wipro, HDFC Bank, and ICICI Bank today. So, what's the conclusion for the world markets? It's leaning negative to cautious. Weak Wall Street close, a sharply negative Asian session, and the real swing factor: crude oil spiking on fresh Hormuz risk. That's a tough combination for Indian markets to shrug off at the open. Let's see the next session: the key news and sector impact. A few important storylines to watch. First, the Strait of Hormuz situation. Iran's parliament reviewing a bill to bar US and Israeli ships. Plus, Iran's chief negotiator accusing the US of theater politics. Tells you a lasting peace deal is not close. This keeps energy prices elevated and is headwind for OMCs, manufacturing companies like BPCL, HPCL, IOC, and aviation sector, something like Indigo, and any crude-linked input cost sectors like paints and tires. It's a tailwind, though, for upstream names like ONGC. In fact, ONGC's Q1 numbers were already lifted by higher realized oil prices. Second, Jeffrey's Chris Wood just rejigged his India portfolio. We all know that he's a world's number one strategist, equity strategist, and especially to the Asia region. So he has rejigged his India portfolio, and this is genuinely important context for today. He noted FIIs turned net buyers of Indian equities in July, pumping pumping in almost $2.45 billion as a global memory trade unwinds. He's exited HDFC Bank and PB Fintech, replacing them with MCX and Lenskart, swapped REC for Bajaj Finance, and increased his eternal weighing by trimming Bharti Airtel. His underlying thesis, India's bank credit growth is accelerating to 17 to 18% year on year, the fastest in over a decade, with corporate lending leading the charge at 20% year on year. Third, defense stocks are in sharp focus. HAL, Midani, Bharati Dynamics, GRSE, Masgondoc, Zen Technologies, and BML all rallied 3 to 6% yesterday. The sector has now added $2.5 trillion in market cap this quarter. And while July saw some profit booking after valuations stretched to 56x earnings versus a 5-year average of around 45x, the structural story, Atmanirbhar Bharat, rising exports, order book visibility remains intact. Fourth, it's a heavy earnings day. Over 50 companies report today, including SBI, Titan, Hindalco, Power FinCorp, and Oil India. LIC already reported a strong 23% year on year jump in net profit to 13,492 crores. Britannia's profit rose 14% but missed estimates as higher fuel or shipping costs. These tied directly to the Middle East situation, ate into margins. Watch FMCG and consumer stocks for similar cost pressure commentary today. And let's see the Indian market updates. So today's outlook, given the global setup, today's bias leans cautiously bearish to sideways at the open. Though stock specific action from the earnings will likely dominate as the day progresses. What are the sectors to watch? OMCs, oil marketing companies, and aviation. Because crude spike is a direct negative here. PSU Banks, momentum from yesterday's 2.2% rally continues. All eyes on SBI results. Defense sector, structural buying interest, though watch for profit booking given stretched valuations. FMCG again, mixed. Britannia's cost pressure commentary is a sector-wide read through. NBFCs and financials, because Chris Wood's Bajaj Finance pick and continued credit growth momentum are worth tracking. And what are the companies in the limelight today? SBI, the macro earnings event preview suggests profit may fall 6 to 10% with a marginal NIM recovery. Titan, the Q1 result is due. Swan Defense, this has bagged a new order from Denmark's Switzer is for the 4 advanced tugs and order book positive. Then we have Powerica. This has received a letter of award from SECI for a 100 megawatt wind power project. LIC, we already reported 23% year-on-year profit growth. Reliance Power reported a 45% year-on-year jump in consolidated net profit. Then we have Indus IND Bank. It has laid out a 3-year roadmap, financial year 27 to 29, focused on rebuilding franchise stability. And if you see FII DII data of Thursday, yesterday, FIIs are the net sellers of just 17.68 crore. It is essentially flat, a marked cooling from the 943 crore of selling 2 days earlier. And DII's net buyers, of course, of almost 4,013 crores, a strong, consistent cushion. So what does this tell us? FII selling has almost stopped. And that lines up with Chris Wood's report of $2.44 billion in FII buying for the whole of July. As the global memory air trade unwind pushes foreign money back towards market like India. Meanwhile, DIIs continue to be the dominant steady force absorbing any residual selling. This combination fading FII outflows plus resilient DII buying is a constructive underlying signal, even though today's headline open may be soft due to crude and global cues. Let's see today's trade setup. The Gift Nifty is signaling a negative open, trading around 24,650 to 665, down roughly around 75 to 100 points from Nifty's previous close, 24,636. This aligns with our world market conclusion from section 1. Weak Wall Street, negative Asia, and raising crude are all pulling in the same direction. No divergence here. The cues are consistent. So Nifty trend summary is the index closed flat at 24,636 yesterday, holding above its key weekly EMAs. The momentum term structure remains constructive. Weekly RSI near 52 shows momentum is neither overheated nor broken down. Today's likely gap down open would represent a short-term pause within an otherwise intact uptrend, not a trend reversal unless support levels give way decisively. What are the support and resistance for intraday? The resistance zone is 24,750. It's the same yesterday also. The range is same from last 4 days. 750 to 800, and immediate support we have at 24,350 and 24,400. The deeper support would be at 2400 and 24,000. What are the zones to watch? Reaction zones. A hold above 24,400 on any dip would keep the broader bullish structure intact. This is the zone where buyers have previously stepped in, worth watching for a reaction. A decisive break below 24,350 would open the door toward 2400 to 24,000. Sellers would likely find this zone attractive to add short exposure if the index loses this level with volume. On the upside, a reclaim of 24,750 to 800 would suggest today's gap down is being observed quickly and could set up a push back towards 25,000 territory. What are the event risks today? We already saw this. SBI's Q1 results are the single biggest domestic catalyst. Expect elevated volatility in PSU Banks stocks and Bank Nifty around the announcement. With over 50 companies reporting, expect a stock-specific, headline-driven session rather than one clean index-wide trend. That's your complete pre-market brief for August 7th. Global cues are soft. Crude is the wild card, but underlying FII DII flows remain constructive. Trade safe, manage your risk, and I'll see you in the next video.
वीडियोस बनाने हैं फिल्मोरा है ना।